So guys, I just experienced what I think is the biggest single day drop from an individual company in my portfolio since I started investing. And that company, guys, is Clear Secure, ticker symbol YOU, which is the newest addition to my portfolio. I just started buying this stock like mid-September, so it's a very new addition, and it's had a pretty cruddy week in terms of share price performance. Looking at this, guys, going back just a couple of days, heading into November 7th, the share price went from $38.50 really down way low to where it's at now, $27.85. So a huge drop. We can see that there was a really big sell-off right here on November 7th as well. And looking at the numbers, it has the 5-day period down 21.4%, and it's also down another near 2% today. But if we zoom in on just these last couple of days, which is where all of the action happened, going from $38.50 to where it's at now is actually a 28% drop, which is absolutely insane, and in my opinion is pretty overblown. And real quick, guys, what we were just looking at there was from Snapstock, which is the new stock analysis tool that I just came out with. And you can get access to Snapstock when you become a member of the investment club. If you want to learn more about that, there's a link to check it out both in the description and in the pinned comment. But like I was saying, guys, I think this recent drop was a bit of an overreaction, and it happened as a result of their most recent quarterly earnings, which actually were really good. Looking at the numbers, revenue saw a huge jump year over year. They did $38 million more in sales this quarter compared to the same period last year, which is a 24% increase. Very solid, and for the 9-month period, revenue is up 27%, even better. Now looking at the bottom line, earnings per share saw a big jump too, actually even more, climbing to 30 cents this quarter compared to 21 cents this time a year ago. That's a whopping 43% increase, guys. And looking at the 9-month period, the growth here is unreal. We're looking at a 124% increase. So all of that is obviously looking very good, and none of that is what caused this crazy drop. That actually came from the free cash flow results this quarter. Now looking at those numbers, the company reported a near $38 million free cash flow loss in Q3. Last year, they also reported a free cash flow loss in this quarter, and in both cases, this was to be expected. They actually told us about this last quarter, and this is something that happens every year. You see, Clear Secure has a partnership with American Express, where Amex cardholders can get these perks to where they either get a massive discount or they get the entire price of their Clear membership paid for. Basically, when an Amex cardholder uses their annual credit that covers part of or all of this Clear subscription fee, Clear recognizes revenue from that membership. But because of this partnership and because Amex basically drove the sale for them, Clear shares a percentage of that revenue with American Express, and they pay it out to Amex in Q3 every year. Overall, this is a net positive though. Essentially, this partnership helps Clear get more customers and helps Amex offer more perks for their customers. So really everyone wins. But anyway, back to the free cash flow. Even though it was negative for this quarter, we have to zoom out and take a look at the bigger picture here. And upon doing so, we'll see that Clear is still printing cash here in 2024. For the first 9 months of the year, they generated nearly $150 million in free cash flow, which is a 37% increase compared to the same period last year. And back over here on Snapstock, looking at some of these growth metrics, clearly what we saw this quarter and have seen this year is right on par with how Clear has been performing over these last handful of years. I mean, starting with the revenue here, it's been nothing but straight up and to the right. That's a great sign, and that trend has continued here in 2024. You know, as far as the earnings per share, the thing about this company is they only recently became profitable. Prior to 2023, the earnings were negative, but you know, it's since became positive and it's trending in the right direction. And I think as time goes on, the earnings per share chart will look a lot more like this free cash flow per share chart, which, like the revenue, has been straight up and to the right. In fact, they've been free cash flow positive longer than they've been net income positive. So overall, I'd say that Clear is still firing on all cylinders, and the company still has no outstanding debt as of this most recent quarter, which is the cherry on top to all of this. Not only that, but prior to releasing their numbers for the quarter, Clear also announced a 25% dividend increase, which is fantastic. So with that said, you know, all of this leads me to believe that the craziness going on with the share price is just way overblown. This is a growing business that just looks to be getting better with time. And for us investors, you know, a growing business paired with a declining share price is a recipe for a great buying opportunity. And this is a buying opportunity I am most definitely taking advantage of. With this drop, guys, I ended up throwing some more cash into my brokerage account and swooped up 13 more shares of Clear. And next week, I'll be adding a bit more on top of my weekly contributions to do the same. And with that, now taking a look at my full position over here on my dividend portfolio tracking spreadsheet, which you can start using for free. There is a link to download this spreadsheet in the description of the video. I hope you check it out. But with the addition of those 13 shares, this is going to leave me with 57 shares of Clear at an average cost of $32.18, which, yes, with the drop is still quite a bit above the current share price, but by picking up those 13 shares at a discount, I was able to bring my average cost down from like $33 and some change to where it's at now. I actually think I lowered my cost basis here by over $1, which I'll take any progress I can get there. But nonetheless, guys, this is the current picture. You know, it's going to leave me down about 13.5%. But like I said, guys, this is the perfect situation playing out right now. If you plan to be a collector of assets, and I'm guessing you are, then these type of share price fluctuations should be welcomed. And I know this sounds a bit counterintuitive, but having the share price go down is like the best thing that can possibly happen if you're continuing to buy more shares. Think about it like if you were buying groceries, you know, you would much rather pay less for things like eggs and milk and coffee, and buying stocks really is no different. Lower prices just mean that you can buy more shares of these great businesses for less money, and you can make your investment dollars stretch farther, which is a good thing. So with that, don't look at instances like this as a setback, you know, look at it as a sale. And in this next video right over here, I'm telling you about 3 more stocks that also look like they are on sale and all look like great pickups right now. So click right over here to check those out, and I'll see you in the next one.